What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis for Restoration Hardware, ticker RH, because that was one of the worst hit stocks today in the stock market, falling over 40%, which is something you don't often see. And the reason for that, at least according to Qualtrim here, is because shares of companies within retail and these spaces are trading lower amid heavy selling pressure as markets react to Trump's tariff announcements, which may hamper consumer spending, right? Because it's going to increase the cost. But we are going to go through that and see what effect those tariffs will actually have and if this company is now undervalued or what I'm thinking about it. So, this company, I believe, I almost want to say back in the day, Warren Buffett used to buy this stock. I've never owned this stock, but I'm pretty sure, correct me if I'm wrong, but I'm pretty sure this was a stock that Buffett owned back in the day. I'm pretty sure. So, this is a $2.7 billion company. And let's see what the analysts have them doing for EPS next year. We are looking at roughly $10. Oh, that's a huge jump. $5 to $10 EPS and then $15. That's a huge jump. So this stock actually looks undervalued from that perspective, but we're going to get more into it. So 10%, 11% revenue growth both this year and next year. However, here's where it gets bad, which this is a compelling story because if their earnings is expected to jump that much, that's a very bullish sign, right? But look at the numbers the past couple of years from 2022 to now. These last 3 years have been awful. The net income has fallen tremendously, and the revenue is actually not as bad, but it's still pretty bad because it's pretty much been flat and it's kind of been falling a little bit. Free cash flow negative. The debt is high with barely any cash on the balance sheet. And then I always like to check the shares outstanding, which if we can actually get down there, we can see shares outstanding are actually lower. So they've been buying those back. That's pretty good. Return on capital of 8%. That's not very good. But again, the big news here is that like a company like this is going to import a lot from China, right? Forward PE of 12. That's insanely cheap. So this company is insanely cheap right now. But again, their numbers have been bad the last couple of years. Look at the profit margin, 2%. That's those type of margins cannot afford to, have their expenses raised that much. But what we're going to do is still here. I made a table of all these different companies, how they're affected by these tariffs. Restoration Hardware gets hit the hardest pretty much out of all these companies. Tariffs on average of 46%, and that's going to hit their profit line about 23% decrease in profits. So that's a pretty big deal because I think at least 70% of their materials come from Asia. And so that's going to face big tariffs, right? But if I can get, let's see, I wish I can go. I think the very first one I did was Restoration Hardware. No, not NVIDIA. What I did was so here, yeah. So many sources, 72% of products come from Asia, blah blah blah, Vietnam, China, and 46% levy on Vietnamese imports, and then 54% from China, right? So it's really bad. And keep in mind, they can always pick a US supplier, right? You can always do that, and that brings it down, but that takes time. Who knows? They might be able to switch soon, or it might take years. Who knows? But it looks like so we don't want to look at their earnings. We want to look at, oh, they also expanded into a North Carolina factory. See, so that's good. Aiming for 48% of its upholstered furniture to be produced in the US by end of the year. That's a very good sign, right? And the weird thing is, again, look at CEO expressed surprise during an earnings call upon the realizing the extent of the stock's decline. Acknowledged the aggressive nature, but also praised the Trump administration. That's surprising. Praised the Trump administration's strategic trade negotiations, suggesting potential long-term economic benefits. That's kind of surprising, right? But now, if we scroll down here, we could see that this would be an example of how the tariffs cut into the profit. So let's just say they import a $1,000 couch from Vietnam, right? Typically, they pay $1,000 for that couch. There's no tariff, okay? So the total cost to get it into the U.S. is 1,000. They sell it for 3,000. The gross profit is 2 grand, okay? Now, with that 46% tariff on there, now we're looking at the new import cost is with that tariff adds $460 to that $1,000 couch. So now that with the tariff included, it's 1460. So that now their margin is down by 23%. Now they're only profiting 1500 instead of 2000. So it's not like it's the end of the world. That's a significant drop, but it's not the end of the world. Now, and here, if they sell 100,000 couches a year, then on average, that would look something like instead of doing $200 million, they're going to do $150 million. So it is a significant decrease, but not the end of the world. It's something where they can make it up We don't know how, Trump could, in a month from now, he could switch things, right? He could change the numbers, he could change the rules, he could make exceptions. So I don't know. This one, when I looked at this stock this morning, I said, guaranteed, I'm not buying this. I'm not interested. But now, I mean, look at this. Yeah, this was the one Buffett bought back in the day. Over a $700 stock back when we had this bubble in 21, and then it traded at 250 for a very long time. Now we're down to 150, almost a 5-year low. But I am very interested the fact that this EPS is expected to jump 3x over the course of 2 years. That's insane. Because so right now you're paying 10 times next year's earnings if these numbers happen. Now these numbers are probably a little bit outdated just because they probably don't account for these new tariffs, but it is very no, look, they just missed expectations by 17%. Quarterly EPS of $1.58. That means they got long ways to go before they're doing, over $10 to $15 EPS. So I don't know. They're probably going to miss these numbers. These numbers are probably going to come down drastically. So I don't know. Right off the bat, I'm not super interested in this, but I will say if I were to do more research or if you wanted to look further into it, I would say figure out what is the more accurate number for what they're going to do for EPS and where are those profits coming from, right? Because their profits did drop a lot, so maybe these were a one-time cost in 2024 or something. So that would kind of make sense. But still, I would just be skeptical. And for me, there's so many better companies out there. What was their margin back? Okay, so they did have decent. No, that's their ROI. What was their 14% margin? So that's okay. That's a little bit healthier than these 2 and 4% numbers. So I don't know. Right now it's a no for me. I'm not. I would not invest in this. But if it's something you're looking into, I would say just really look into why that EPS is increasing. And again, is that really a better investment than Nvidia and AMD and Taiwan Semiconductor and Microsoft and Amazon right now? Not really. So that's the way I look at it. Thank you for watching, and I will see you in the next video.